Do you know what I'm ready to do today? Bust a myth. The big question is, are you ready to bust a myth with me? Let's go, shall we? Kristen Sonic is in knowledge. Kristen Sonic is in knowledge. Bust a myth. 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 Hey everyone, I'm Kristen Maka with Futurity First Insurance Group, and welcome to Bust a Myth. Today we will be busting the myth that life insurance is too expensive. Of course, if you're looking at a $2 million whole life policy that's going to last you out to age 120, of course you're going to have sticker shock. And if you have lots and lots of health issues and you may have extreme ratings from a company, you may have a little bit of a sticker shock. But that's something that you and an advisor like myself can help navigate and help plan so that you can get enough life insurance in place for your situation so that it's affordable for you and there's not as much sticker shock. So let's go check out a couple of examples today. All right, my friends, let's look at a couple of different examples. So first off, we will look at a male and he just got married. They're planning on having kids. They just bought a house as of last year. So young family has a lot of debt and wants to have this insurance in place for quite some time. So let's look at two options there, 20-year and 30-year term, and we'll go with the $1 million policy. He's young, doesn't have any health issues. We'll just put him down as preferred. There's one more health rating better than that, which most young people do get, but I always like to show a little worst case scenario. So here we go. We got 20-year and 30-year terms up here, and for that $1 million worth of coverage for 20 years, you can get that insurance into place for just under $500 a year or $41 a month. 30 years, you're looking at that same coverage for 30 years. That's quite a long time, and these prices, they are put into place and they are there for the duration of the product. So you won't see an increase in premium there. Let's look at another example. Say we have a female and she's got a child, 10 years old, perhaps recently divorced. So maybe we only need the insurance in place for 15 years. And she's a little bit older, so she's gotten quite a bit of her debt taken care of, but just wants to make sure that this child may be able to go to college, on top of making sure that if anything were to happen, everything would be taken care of for her child. So we're looking at $500,000 worth of coverage, but let's say that she has a little bit of health history, perhaps weight problems, high blood pressure problems, cholesterol problems, and maybe a little bit of family health history. So for 15 years worth of coverage at $500,000, you're looking at $373 annually. Monthly, what does that look like? Only $32 a month. That is extremely affordable for a working mom to be able to insure her child to make sure that if anything were to happen, everything in her child's life would be financially well taken care of. Let's look at another example here. We'll go with a male, 55 years old, perhaps divorced, just getting remarried, and he's taking care of his parents. So quite a lot of responsibility on his plate. We'll go with the same 15-year term length, and we'll say that he's healthy, but he is a smoker. And unfortunately, ladies and gentlemen, as you can probably guess, smoking hits hard. But let's look at the rates. So for 15 years with $500 worth of coverage, it's under $500 a month for a 55-year-old male who's a smoker. So very, very affordable coverage to make sure that his new wife and perhaps his parents are well taken care of if anything were to happen to him. And let's look at one example. Let's look at a female looking to convert her coverage. She knows that she wants $100,000 worth of insurance in place when she dies. But right now, she just wants to look to save money and convert it later. She knows that eventually she's going to get a promotion, or she knows she'll have the cash a little later on. Kids will be out of the house, whatnot. So we'll look at age 37 for a 10-year, $100,000, and we're going to go with a standard non-tobacco rating. So perhaps takes a couple of medications and may have had a little bit of family health history. And look at that. $10 a month, she can make sure that she has the insurance in place and not have to worry about not losing her eligibility for life insurance, and be able to convert all of that insurance or part of it, depending on the company, to a permanent product later on. Thank you so much for watching today. I hope you learned a little nugget or two and were able to bust this myth with me. If you have any questions, concerns, would like to see some numbers, don't hesitate to give me a shout. If there's a topic that you would like to see, also let me know in the links below. Also, if you have not yet subscribed, do so along with clicking that notification bell. And if you enjoyed this video, please give me a big old thumbs up. Thank you so much again for tuning in. Have a blessed rest of your week. We will see you next time. Take care. Bye.